Okay, guys, welcome to day 4 of the FTX Market Mastery online webinar course. It's been really good to host everybody over the last week and a half. We're coming to the end of the course. We've got tonight, and then we'll have the last episode of this course on Tuesday, 8 o'clock, as always. We'll be wrapping up with day 5. So tonight we're going to be going through what I believe is probably the best, or what you're going to get out of it is going to be the best day or the best content for the entire course. So make sure you're paying attention, and we're going to be going through trading strategies. This is the main thing that you guys are going to make money from, right? So this is where you want to really clue in and pay attention and sharpen up. Make sure you got your notepad out if you need it, taking screenshots and things like that when you need it as well. And this is definitely probably the main one that I would suggest you guys are going to need to go back over and watch the recording a couple of times, especially if you're newer as well. So yeah, anyway, tonight we're going to be going through, Troy's going to take you through one of his pretty much best strategies that he's got, and it's got an 84% strike rate, and it's been back tested and forward tested as well. So he's going to go through the whole checklist of that, and I've seen his slides. I didn't realize they were going to be so in depth. He's got like fucking 45 slides for you guys. I've got 3, so I feel like a little bit of a dud. But I'm going to be going through everything on the screen anyway. For my setups, you don't really need that much info for. So yeah, it's really going to be a really good session tonight. And I'm going to be taking you guys through what I believe is, or what I know is, my #1 most profitable trade setup, which is a swing failure pattern combined with a bull div. Right, so we're going to go over that. And if you guys really like tonight, a lot of people have been messaging us and asking us, oh, you know, how can I get more content? You guys are going to be running another course and all this sort of stuff. So when we first went into lockdown, me and Troy decided to do a special discount for everyone that wanted to do our Market Mastery course and do the full course, which is a 26-hour course, which is valued at $500 AUD. So we've decided to give the same discount again, which is the Save 100 discount. And that's going to be available to FTX course members, which is you guys, for the next 2 weeks. So it's going to finish on the 14th of August. So if you want more information and stuff like that, and more training and education after this, you can go and enroll to our course. We'll give you guys $100 off, which is pretty much a 20% discount. Which is pretty massive. So hopefully you guys get a lot out of that. It's a pretty epic course. It goes for 26 hours. It goes from very beginning to the start. Troy's going to go through a little bit more at the end of his session on what's actually in the course, if you want to know more info on that. But that's pretty much it from me. I'll quickly just do a market scan of what I'm looking at the moment. We've got this falling wedge at the moment, which is trying to play out, but it just keeps on doing nothing, going sideways. I think the main thing that we really need to watch on Bitcoin is this weekly close. And for me, a weekly close above above 10,600 is what I'm really looking for on Bitcoin. So we already got a tag off that on the daily, off that order block, which is pretty nice, right? So this just needs to hold. And what I am really expecting is this just to keep grinding sideways and probably grind up on a bit of an angle similar to this price action that we saw here after the other bottom fractal. You actually have it on one of these slides here. Yes, which is this one here. So sort of similar, you know, we sort of got what looked like a really bullish market structure, and then just sort of like broke down into like a rising wedge type shape, and then just went sideways for a little bit. So this was actually after the bottom pattern in 2019. If you're trading that with us or not, this was BTC in the 3K range before we broke out on that massive parabolic run. So this is what you would call, after the Wyckoff accumulation pattern, the SOS, so the sign of strength, right? And I sort of feel like we're going to do something like that here after the reaccumulation, because it's typically how it works. It might not go for as long, but it's sort of shaping up like it's going to keep chopping around for a little bit longer. And then hopefully, you know, we break out and we get a weekly close above 11,600, because that's the real test for me on the weekly. But so we'll just quickly have a look at that just to refresh your memories. We haven't closed above, on the weekly, we haven't closed above 11,600 since January 15, 2018. So it's been a long time. And the thing that's coming up in a couple of days is this monthly key level, right? Which I actually have mapped out in the chart for you already here. And we've only ever closed above 10,760. We've only ever closed above that one time in the whole history of Bitcoin price action, right? So it's pretty important. If we can get a close above there, I think it's going to take off, and we'll probably try and fill to about 14K, I would think, within the next month. So it's going to be really interesting because that close will happen Friday. So Friday's the 31st, right? So that will happen for us on Saturday. Well, no, it might be Sunday morning. Maybe I'm getting confused with myself. So it will be Sunday morning, our time will be the monthly close. Is that right, Troy? Or is it going to be because of the US? Sometimes I get confused on the monthly.
It'll be Saturday midday for me, so Saturday 10 a.m. for you.
Yeah, so it is Saturday, which I thought it was going to be Saturday. Yeah, so because it actually goes on our time, not the US time, for the monthly close. So it'll be Saturday morning 10 a.m. that the monthly will close, and we want to close above this level here, above 10,760 on BitMEX, and the other ones it's slightly a bit different, but let's see how that plays out. The other one I'm looking at, not IOTA, Troy is going to go through that, is Tezos, right? XTZ is starting to look pretty good. We're obviously really key, very, very important daily support level, which is actually playing out as a massive daily bull div. So I'm going to go over daily divergence, right? I'm going to take a look at that today, actually. So it's interesting. We've got one there, right? And then there's also a pretty big one on the 4-hour as well, right? We can see that here, and it's also played out as a little bit of an SFP. We can see it was taken out that level. Well, this isn't like an amazing SFP that I would look for. We're still sort of with the key level, right? And then we had a really nice Morningstar reversal here, which actually engulfed 2 candles before it, right? So it's looking pretty bullish here at the moment, and I would expect us to at least come to tag this level here. It depends. If Bitcoin gets really aggressive again, this might just end up playing out as a bear flag and going like this and then rolling over again. So don't expect it to come all the way up here or shoot for a moonshot, especially if Bitcoin starts breaking out and moving to the upside. The other one I just want to quickly touch on is Ethereum, right? Ethereum is looking pretty nice on the hourly. All right, check this out. Looking very tasty at the moment. Is Ethereum, right, in this big bull flag at the moment, symmetrical triangle, right? I think if this breaks out to the upside, it's going to be pretty nice and it should run, right? If it breaks to the downside, that might be a nice short, at least back into this level here. So just going to watch and see how that plays out. And it looks good against Bitcoin as well. I've got the wrong chart. This is the one I want. Right, it looks pretty good against Bitcoin as well. We need to get down to daily, right? Sitting on a really nice key daily level. Might even come back down and touch the close here. But on the 4-hour, it's looking really nice. You can see we've got the multiple touches here on key level of support, which is the previous swing high of the previous market structure. And now it's getting ready to push. So that's pretty much it for me on market update. Hopefully you guys can learn a little bit from that and look for some trades. I'll pass it across to you, Troy. Can't hear you, brother, if you're talking.
Cool. Yep. Sorry, just going to chat up. Cool. A swing high, I'll just quickly explain that question. So when you're in a trend like this, okay, maybe I'll zoom out, actually, go to the 4-hour. So what happened here was we were in a swing low, in a sense, here. So price was retracing. So it wasn't a bad thing. Coming down isn't always bearish. It can actually be quite bullish. So this is like a swing low down here, coming down, and then we got a swing high up here, right? And then we'll should make a new definitive low somewhere, which will be the new swing low, and then we'll have a swing high again. Does that make sense? So even though the trend is up, there will be periods where it comes back down before it goes up further. All right, it's not always just straight up. Cool. All right, guys. Just wanted to cover a couple of things real quick, just for those guys who are tuning in late after the post we put out again this week about this course, the late signups. in the Discord servers, right? When you join mine, if you want to join it, there's a free month for August, which will start on, or pretty much started last week, but if you're late, it runs for the entirety of August. To join it, come over to add a server, go join a server. For mine, you can just write Bitcoin, or for Carl's, you can find it in the social links. Once you're in the server, you'll appear here, okay? There's an FTX exchange one, which has all the details. The TradingView list of all the tickers, you can import that to your TradingView, which we did in, I think, day 2. And then there's also the free month. The only thing required of you to get into this is put your FTX affiliate link here. Once you've got a little emoji reaction to it, it means I've added you in, which means you should then have access to this section and this section, and I think the education section down here. Yeah, to check that out, it's free for a month. You'll be able to hopefully follow what me and Kyle do and the content that we share by following what we've done during this. So when we share content for the next month, you'll be able to say, oh, that's what he meant by this. Oh, that's what he meant by this. So when he says there's an SFP on the 4 hour on XTZ, USDT, he's meaning there's probably going to be a bullish move to the upside shortly afterwards, right? So you'll start picking up on our lingo and how we trade, and hopefully you can start to benefit from that. So get involved in that. And then we're going to get stuck into today, the trading strategies, right? So today's about TradingView and working out how to find it, mapping it out, and then taking it. Taking it will be on FTX. So I don't have a live trade to do for us now. I'll see what I can figure out for this 5th episode we're doing. And that's when we're going to go from start to finish and taking a technical analysis, the trading strategy, and implementing it all into one. But today we'll just go over the step-by-step process of taking this trade setup. So we'll get into that first. Come back up here. Cool. So get into it. This one here. So people who know patterns, Bloyd, there should be sound, right? There should be sound. Everyone can hear me, I assume. Just a real quick chat. You guys can confirm you can hear me? Someone said like, yeah, cool. Okay, all good. Sweet. Cheers, guys. Cool. Get back into it. Actually, I'll just do a real quick market update before we do anything. Bitcoin. So we go down, get down time frame. We had an ascending triangle here on a smaller time frame, the 30-minute, 1 hour 30-minute, and we're broken down from that, right? So I think we're either going to end up retracing or going for an even larger one. Okay. So something we need to watch for is that, which is why I usually have indicators to assist with patterns. At this stage, it's just chilling. There is a 30-minute bull div we just had on the RSI, which is this indicator I've got that where is it here? Advanced RSI. If you want a copy of that, there is a channel in the Discord as well, in the indicator section called Advanced-RSI. If you want access to this particular one, which shows you where the bear divs and the bull divs are, and actually has alerts too, which you can go into this and set an alert. So up the top here, there's the alert section. You can go add new alert. Where are we here? And then we can actually choose the indicator and actually choose a bull div or a bear div. And then when we get a bull div on this time frame, it'll send us an alert and say, hey, look, pay attention, there's been a bull div put in, right? It can be really handy for a bull div trader, because on a 4 hour, a bull div is massive. On a daily, a bull div is massive. So this is a free indicator. You can get access to it. I just need your TradingView name in that channel, and I'll add yours one by one. So Bitcoin, just going sideways. So we covered the other day trading ranges. So let's apply that to what's currently happening, right? Technically, we're into some form of trading range, right? It's bouncing until we get clarity. So if we come down to here and then bounce, fantastic. If we fall under and then carry on, fantastic. Or if we bearish retest that and come down, fantastic. It doesn't really matter. So far, it's just chilling. While it's chilling, other coins are having a field day, right? If you guys followed that trade that I was talking about in the last episode, how that weekly trend line on the log scale is coming down, right? And we had breached through it. Now we're getting upside action. And we're seeing tweets coming through from IOTA, the CEO, the co-founders, right? They all start to play their game. This is a big business, and that's all it is to get this price up at critical points. And this is a critical point. So if you jumped on with me, we're up about 10 to 12% so far. Looking good. Really simple stuff, this one. And the CME gap, we'll just look at that down here. So with CME gaps, someone asked last week about a trade setup based on the CME gap. I'm going to dismiss that real quick. Don't ever trade the gap. Wait until something else appears to allow a trade down here. So if price comes back, look for a trade setup here. Don't just go long here because there's a gap. That's retarded. You need to have at least 3 points, I reckon, like Kyle mentions, to take a trade. CME gap, I would say, counts for maybe half a point, right? So don't get too crazy about these, but they do exist and sometimes they get filled. So we'll go back to this. So the pattern that we're learning today and how to trade this is it's an ascending triangle. It's a very common fractal in all markets, not just crypto. It actually plays out in every market. It's one of the easiest to identify usually, and there's different ways of trading it as well. I'm going to teach you one of the ways I trade it. I trade it multiple ways. This is the back-tested and forward-tested way. All right. So we'll get stuck into it. How it works is there's an impulse move to the upside first, right? So what that looks like is this. Price first came up, right? And then started consolidating sideways. And then by doing this, it starts to create higher lows on the way up, but it keeps getting rejected at the same point across the top, all right? We'll come back to this here. Where are we? This one. And then we end up getting usually 3 bounces on the support, sometimes 2, and sometimes this last one here gets front run. And what I mean by that is that doesn't come all the way to support. It gets pretty bullish, and people start buying up before support, and it creates an even shorter dip the third time. So you've somewhat got to watch that. If you want to trade this as a very strict strategy, you could always wait for that third one, and if it doesn't come, and then maybe buy the retest of the break. But for now, let's just keep it like this. Keep it simple with rules. So the rules are: we enter on the third dip at support. The closer we are to this trend line, the better, because that means our entry will be closer to our stop loss, allowing for a greater position based on that risk management formula that Kyle taught you guys, I think it was last week, all right? So how do we take this as a trade? So there's 2 different ways of taking profit in this. There's 2 targets based off the pattern itself. So we come back to the pattern, and this is the one we're looking at here, okay? So I found one that's nice and clean, that has a nice simple retest and broke to the upside as an example. So based off our little form here, the furthest point within the pattern, right? So let's identify the pattern back here. Real simple, right? Just a triangle, right? Like we covered in the last weeks. As long as you knew how to put that circle inside the hole in that cube toy as a baby, you're going to get this right. All right. Ascending triangles, they actually play out on every time frame from one minute all the way up to the 1 day. And I'll show you an example of that here. Where's the 1 day? This here took 3 months to complete an entire ascending triangle, right? And the same rules applied. Yeah, and just in the Beer and Bull Discord, and the channel's called Advanced-RSI in the indicator section. But there's one here that took 3 months, right? And the one that we're looking at now took, how many days is that? 22nd to the 4 days, right? So the all time frames. The beautiful thing about these fractals or the patterns or whatever name you want to give them is the characteristics stay the same and the targets stay the same, right? So I'm going to teach you measured moves. You can use fibs as well, which I can touch on, but I'd rather stick it to the measured move. So the furthest point within the pattern, all right? So we'll come down, and this particular one, it can be here, right? That's the furthest point in the pattern. So back to our cheat sheet. Based on the furthest distance within the pattern is target 1 from point of break of horizontal resistance. So this section here from the top to the bottom, we then drag that over to here above, okay? So we'll come back to this, we'll grab that line. We've got to make sure we're on linear as well when we do this because log scale actually warps our trend lines. So make sure you're on linear. Linear is when it's gray, okay? You make sure you're on linear and you drag this to the point of breakout. So where we broke out here, that resistance line, right? And this is where our target 1 would be, right? So that trade would look like this. before we go for target 2, let's go to target 1. Long position, would enter on this third touch somewhere here, maybe here. Just for safekeeping, we let the bounce happen, we get in after that. Have our stop loss below the previous low here, right? And that's our trade there. So nice little setup. We can put this a little bit higher because that's where the measured move is, right? So again, a nice little ratio here. It's a high strike rate pattern that can be done on all time frames, but that is the basic setup before we add indicators to improve our probabilities of this playing out in our favor. All right, so that's how the trade will look like. So based off that cheat sheet, come up, come down, come up, come down, come up, come down, get on the third one, and then ride this up. All right. The second measured move can be found by going from the impulse move. So this could be a little bit harder, especially for the an inexperienced trader. So measured move 1 is always an easy one. Measured move 2, you've got to work out where did this impulse move start, right? And this could be quite difficult to get sometimes. Even for myself, I get a little bit, which one is it? So you just try and, in this particular case, I'm going to go from this. So there was a SFP kind of type candle here, and it came down to the bottom, right, and created a new low, and then recovered from that point onwards. So between here and that top, there was no real point of reversal like what I see here, in my opinion. So I'll go from there to here, right, and I'll drag that or copy and paste that so you can have both from the point of breakout, right, which then takes us up to here, which then we can take the exact same trade, and that can be our take profit, right? So the reason there's 2 targets is usually you can average out as well. Depends on what your trading strategy is or how you want to go about it. Usually I'd take most off the table here, maybe 70%, 75%, and let the rest run to here, right? Which will go back to the ascending triangle sheet, which is, we'll go down and start. We'll carry on here. Okay, cool. All right. So I've just identified the targets and the pattern itself, right? Just a triangle that looks in ascending nature. Doesn't always have to be this perfect wick to wick, okay? It doesn't have to be, this isn't more of an art form than an OCD, okay? See how my lines go through the candles, through the wicks? Is it more of an art form? You're trying to identify there's flat resistance, but there's ascending bottoms, all right? Cool. Come back to here. Cool. All right, let's quickly read this out. Now, some of you already may know this pattern, but what we do next is where we turn the odds in our favor, which is the indicators we're going to add next as well. Indicators can assist with trading strategies as they can account for data we cannot see by simply looking at the candles, right? Yes and no, Ben. Yes and no. So I've got data on descending triangles as well. They're definitely more of a bearish pattern, but they can play bullish too. In a downtrend, you will usually see them an ascending triangle play bullish and then fail. So a bit of a harder one to play with. We'll stick to the ascending for now, okay? Yeah. So I'll drill down real hard on the last slide. All right. Indicators can assist with these trading strategies. They can account for data we simply cannot see by looking at these candles. And by that, I mean, we clean this up, draw our triangle back in. We can't see the volume, right? We have no idea what the volume is doing during this. We have no idea what the moving averages are doing by looking at this. So we want to know that data, and only the indicators can help us with that. So we go back to this. Having backward and forward tested this data myself, I have found a nice recipe that leads to a high success rate. But this is the important part. Don't take my word for it. You need to audit this yourself. Forward testing is individual. It's an individual thing. Every trader will forward test differently because we've got different risk appetites, different emotions, different reactions. So you need to forward test anything you're going to do yourself, whether you buy a strategy from someone or whether you're following a strategy. Just because it works for them doesn't mean it's going to work for you, because you've got completely different approaches or maybe less experience or just for whatever reason, right? You've got to add that human element into it. And humans fail and they learn from their failures usually. There's an FTX channel, mate. It's called FTX-free-August in the Bear and Bull Discord. And Kyle, I believe, has got another channel of his own, but he'll probably cover that when he begins his shortly or after this. Next, we'll move on to the pattern, right? We just identified it. In this particular case, we're going to, well, I'll read it out. Let's assume we can't see the dotted lines. And that by the dotted lines, I mean this, right? We can't see that yet. So because we've got 2 points to work with already, but potentially a third, and the 2 points across the top, we're going to draw that in. So what that would look like is this. Come back to here, right? We can use this replay tool like that. So what we're seeing is there's a potential at this point for upside move, right? Coming from down here, from there. We can see it's ascending in nature. So the lows are getting higher, but it was a double top in the sense that price rejected the same horizontal level. Do I scale out 50? No, I take about 70% at my first target, and I take the rest at target 2, unless I'm using fibs as well. Cool. All right, so what this is saying, the slide's saying is we want to be able to identify it before it forms so we can get ready for the entry, okay? So we've only got the 1 here and the 2 here. Ideally, we want a third and then a breakout on the 4th. Sometimes you don't get that, so we're just going to watch how this plays out and react. But that's what this is. You've got to be able to identify it before it plays, so then you can start doing your homework and get ready for the breakout if it does come, or for the entry, for instance. Cool. Just going to quickly cough. Sorry, guys. All right. So the next step, well, the first step really is after identifying it, we want to use Fibonacci. So the Fibonacci retracement can be found on the tool section to your left, up here. It's called the Fib retracement tool, okay? Now what I've done is I've actually edited mine a little bit. So I'm going to set it back to default and then show you how I achieve what I achieve. What we want to do is go from the start of the impulse move to the end of the impulse move. See, I've got the little arrow to the black start here, to the end start here. So what we're doing is coming back to our chart. We chose that as our starting point and we drag it to the top here. All right, I'm just going to set this to default. So it'll look exactly like you guys when you first do it. So what we're doing is we're measuring where it retraces to or where it comes back to. So I'll just drag this to the right. I use the coordinates when I drag, right? Because it keeps it exactly at this dollar value level. If you start dragging it around yourself, you might get it wrong and it might be slightly off. And I prefer precision over most, right? So what we can see is during this formation, it came down, lost the 382, which is a golden ratio fib, all right, and then came back to it, lost it again, and then reclaimed it. And on that third touch here, it held it. And that's what we want to see. So based off this, from the start to the end of the large impulsive move that happened prior to the pattern forming, we want to use Fibonacci retracement tool. Ideally, we're looking for the 0.382% fib, the one I just mentioned, to hold as support or be reclaimed by the third touch, right? So by that, if it came down to the 382 and then started forming the pattern here, that'd be even more bullish. But because it lost it twice and then did reclaim it on the third, for me, that's a bullish setup. And I'm going to be looking to get an entry in here. Okay, so after this impulse candle here, I probably look to get in and have a stop loss under the second low. All right, hope you're following there. So this is just fibs mapping out the strength of the retrace. A retrace down to the 382 is usually a healthy sign. Okay, even the 618, as you can see where it came flying down to the first point, is a really great entry as well. If it does end up doing something more like that, right? So we can also use fibs and customize it a little bit, and that is to be able to get a target to the upside. So at the moment, they're coming to the downside, and you've got a 1.618 extension to the downside. What I'm going to teach you now is just a little bit of a hack that I've been doing for mine, and that is to inverse this by going and adding your own one here. So what you do is you write the minus sign and then go 0.618. And then what that does is gives you a target to the upside, right? So that's a 618 extension to the upside from the price action of here to here. So that is a really healthy target to take profit at. So we actually allow this to play out without having a look prior. You can see this is where it's launched, retested, and carried on. but a fantastic place to take profit. And the long setup would have looked like this. So you enter, if you're going for this third touch, maybe in this candle somewhere here, all right? Stop loss under the second here, take profit at the 618, right? Ratio wise, fantastic. That's a really great trade, right? I don't think you can ask for too much better when it comes to a specific take profit target. So instead of hoping a trade runs to where it needs to for me to make 1-to-1 or 2-to-1 or 3-to-1, because we have no idea how high it's going to go, this trading strategy actually gives you a target that hits 84% of the time when the recipe comes together. Okay, so a lot of strategies you might get in on some kind of EMA cross or some kind of pin bar, but you don't actually have a target. You don't actually know where you're taking profit unless you're going off like 1-to-1 or 2-to-1 or 3-to-1. But you have to hope it hits those 2-to-1 or 3-to-1s, right? You don't know if it's going to hit it or not because you don't have the data that says it will. And this is where this strategy is, I think, very impressive because it kits it all in one and it tells you where to take profit. This thing could run another 1,000% and it doesn't matter because this is the trade plan and we made our cut in the middle and we made a nice little cheeky amount in this and we move on and find the next one. All right. Bullish markets are completely full of these. So now that we're moving into a bullish market, most likely now, you're going to see these everywhere, right, across all peers. As long as they're in an uptrend. So we'll go back to this. So that's the Fibonacci tool, and that's the 618 extension I just mentioned. A little bit of a hack, you can reverse it, and it gives you a target. It usually runs to the 618%, just as often as it hits target 1. If target 1, based off the measured move, and the 618 are very close to each other, then I'd highly recommend probably taking a lot more profit there. Indicators. Now this is because it's a simple checklist approach, we don't need to learn each of the indicators inside out, right? So Ichimoku is one of them. You don't need to learn too much about Ichimoku. You just need to learn how to read the lines of it, which is pretty simple, I believe, but I've been doing this for a while, so maybe I forgot how unsimple it might have been, but I'll try and teach you in a really simple way, all right? They can be confusing and overwhelming, all right? And depending on your TradingView account you run, you may only have access to a few at once. So for me, for instance, I could have, like Kyle does, about 20 indicators listed here and have them all hidden. Where if you've got a free account or one of the cheaper versions, I'm pretty sure you can only have maybe 3 indicators or maybe 5 indicators or something. Not a bad thing. It just could be a little bit of extra work if that's the case. But it's not a bad thing. That's not a bad thing. Don't feel like you need to upgrade your account. And if that is the case, you'll need to cycle through a couple of times, all right? And we're looking to increase our odds, so we need to do this. So a little bit of extra work, which is fine. So the first indicator we're going to add, I'm going to show you how to do this, is like a moving average, right? But it's volume weighted. So some of you guys may know this already. This is one of my top little secret tools. I don't actually know anyone else who uses volume weighted moving averages, let alone the 30. So this is a little tool that I use because it really, really shows you momentum, okay? Yeah, I can definitely throw the PowerPoint presentations in, man. So we'll go back to this, and I'm going to show you, we'll get rid of this autism on the screen, and we'll just draw that clean triangle in again. No, this is just volume weighted moving average. So just a moving average, and it takes a volume into account. So we're going to go VWMA to search it. I've already favorited mine, but it should pop up here by itself, and then you can favorite it if you want. That means when you go to your favorites box, it'll just pop up down here, all right? We want to add that once to our chart, and it's going to put a line on the chart. We don't want that default line, so we actually need to go into the settings and change it. So you come up here, highlight it, and you should get a little cog here, all right? Go into settings. We need to change this to number 30. As default is 20, we want 30, okay? I usually just change this to purple or pink and a bit thicker. That's just because I always color code everything I do. A lot of backtesting, Mark. A lot of backtesting. I spend hours just doing shit people really don't want to do. I get off over this chart stuff, so I'm happy to sit here for hours and hours trying every single one of these moving averages until something clicks. So the 30 works fantastic in crypto, okay? So I highly recommend you explore this in your own time. Don't go down a rabbit hole or anything, but just watch our price respects it. Okay, so when we get above this, when we claim this as support at the end of our triangle, it's telling us the momentum is to the upside because the volume is increasing with the weighted moving average, right? So as volume's coming up and then it starts to go sideways, as long as it's increasing like this and not volume weighted being pulled down by the volume, that means that the momentum is following trend. So it just gives you a little bit of an edge that people who use EMAs or MAs don't have, okay? So it's a true momentum type indicator. As long as price is above it like this, very strong. You can see that's the last point before it takes off, right? So the first step is adding that VWMA and checking as we're coming up to this last point, are we above it? If we are above it, that's tick 1, right? And that's increased our probabilities of this trade playing out. So we'll come back to our checklist. This is just how to find it up here on the little FX symbol. That's to get the indicator, search VWMA, grab that, and then you need to go and then make it 30, which is what we just did. Put it in the slide so you, just in case you forget, backtesting, Neil. A lot of backtesting. I don't use VWAPs, dude. No, Mitch, this is a bit different to that, but we are using that middle line as well later. All right. So this is just step 2 on how to do it. We've just done that, so I won't go over that slide. This is just so you guys can have a copy of this later. So what it means, Sam, is this. So at this point in time, I'm going to use this free play tool to a little bit further here. No, oh shit, we need to go back to June. One moment. Lost it. June the 24th, here we go. So this is the last triangle that formed before the parabolic top of 2019. So these are definitely something you want to be paying attention to. What this means, Sam, is at this point in time, I'll just bring it back to here, that number 30 means 30 candles back from where we are. So we go back 30 candles, which is here. This is the average price yet held down by volume. See how it dips hard right here? But a normal moving average wouldn't have had this, right? And an EMA wouldn't have had this. Because it's volume weighted, you actually get these mad pull downs. And that lets you know when trend is starting to get weak. So if you got rid of the candles and actually had no candles and just saw this line, you'd be starting to be a little bit concerned here, unless it broke out. And this is exactly what it did do, which is held it up, right? So when you start to learn the volume weighted aspect of this indicator, you can start to learn how strong trend is. A lot of what I do actually incorporates this 30 VWMA. So this is the first indicator. We'll come back. All right. Next, our chart should look like this. As we edge towards the breakout, our price reclaims the 30 VWMA. It's informing us that price is bullish with momentum. If we're above the 30 VWMA while heading into the 4th touch of this pattern, we have a very high percentage chance of this breaking to the upside and reaching our targets. All right. So you can see here on this particular one, on the last touch, we reclaimed it and then last point and then boosted off it. Right. No one's actually watching this indicator. Well, no one that I know is watching this indicator. This is the 84% recipe. This is one of the aspects of the recipe, not the whole thing. There's a few more slides we have to check off first to get that 84%. All right. So we've got the VWMA down pat. Real simple. I've got the 20 MA down here. I'm going to go to the 20 MA next, actually, just while we're doing averages. So we'll go back to the pattern. We're then going to add another indicator. This one is called a moving average. You can write MA for short, right? Here. So we want MA, as highlighted the blue M and the A, we want this guy. By default, it's going to pop up as a small blue line with a low value. We come up, just like before, go settings. I'm going to leave this one blue. I'm going to make it a bit thicker so I can see it, and gives us the value 20. Okay, so the reason we're choosing 20, there's 2 reasons. One, it's a solid MA to follow nonetheless, right? EMA 20 and 20 MA, so the exponential one or the standard one, both worth following. And you can see they work quite in tandem here towards the end of it, right? The 20 MA is actually the Bollinger Band. So if we go to the Bollinger Band, if you guys are from Nuggets or whatever, I know he loves his Bollinger Band. So what I'll do is I'll hide the MA, right? And you can see the red line gets replaced with the blue line. So the middle line is the Bollinger Band. So when you're above the middle line of the Bollinger Band, you are usually in a bullish trend. So that's why I added to it, because now you've got the 20 MA guys as well as the Bollinger Band guys looking at the same price point moving average. So you've got double the power on a single MA, where if it was, say, the 25 MA, only people that watch 25 MA are going to be watching that, right? But this is a double whammy. You're getting both eyes looking at the same line. So a bit of a handy tip. And the same thing applies when it comes to this indicator, that when price is above it leading into the end is usually when you get your nice clean breakup. And the 20 usually helps guide that price up. So we'll just press play and watch this play out, right? You can see it comes back into the 20 and then takes off, which is also the 30. So they work in tandem here, right? So that's 2 tips. We need more. Next, moving on to this one here. This is a little bit trickier, but these are oscillating indicators. No, I don't believe so, Mark. The 20 EMA, I don't believe, has much relevance and relevance to the 20 MA because of the Bollinger Band. The Bollinger Band goes off in MA, not in EMA. And I'm pretty sure there's more people using the Bollinger Band than there are using the 20 EMA. So, cool. We're going to use oscillators. This one's a little bit trickier. We want the oscillating range to be above 50 and below, ideally below 70, or just coming out of it. We'll go add it to the chart now. So we'll get rid of these indicators. You can just right click and go remove indicators. Nice, quick, easy way to get rid of them. And we're going to go and add some oscillators. So up here, add indicator. I'm going to search RSI. I want stochastic RSI and RSI. Right, so both of these. And ideally, I also want to get just stochastic. Okay, so we've got 3 different oscillators at once here. Cool. We want to then use the horizontal line tool and then apply that to our indicator. We want to give it coordinates of 50. And what this does is marks on the indicator the mid-level, right? And you can see it gets defended quite often. So as long as we're above 50 and usually below 70, we're going to get a good entry on this trade. So the RSI goes to 70, but the stock RSI and the stock go a bit higher actually. So just keep that in mind. We're going to do that to each of these, 50 above each of them. All right, so you've got a breaking up here on the stochastic RSI. You've got the stock as well, stochastic, also ranging up from this point onwards after our last touch. So this is showing a swing high is due, meaning a move up is due, like the question at the start of this. That's what a swing high is here. There's a swing low and then a swing high on this time frame. All of these indicators are pushing up. So it's telling us, along with our 20 MA and 30 VWMA, that this is looking really strong and it's looking like it's got momentum behind it down here as well. So as long as we're above 50 and usually below 70 to 80 with the stochastic and stochastic RSI, but below 70 on the RSI. We don't want to be too high too quick. We want to have this break out and go stupid once we're out of the pattern, which we can probably see happen. It gets a bit up here. We don't want to see that straight off the bat get too high too quick, right? We want momentum. So we can see that all played into one. So we've got 5, that's 5 checklist items now, right? We've got 3 oscillators and 2 moving averages, 1 being volume weighted. The next step, where are we in the wrong one? This one is the Ichimoku indicator. This is where it gets a bit trickier. Not everyone can quickly follow this. It's definitely taken me some time to get comfortable with this indicator, but I'll try and explain it to you in a very simple way so you can follow it simply. So I'll get rid of the indicators again, and we're going to apply just Ichimoku. You don't need to know how to use this indicator. You just need to be able to find what price is doing, sorry, what the lines are doing. So I'll just bring this back so it's not so crazy. This one back to about here. All right. So as we're covering on the move contracts and volatility, when this comes through price, which is what it's doing here, which is when it dropped here, when it gets back out of the other side, it usually means that it's potential for bullish, right? Because it hasn't fallen under trend. So because it's coming through trend and coming out, that's a bullish sign. So we should be expecting some upside in here, right? We've had a recent TK cross, which is a bullish cross, the conversion line, the blue one, coming up through the red one, right? So that's telling us there's bullish momentum now. That Ichimoku was saying we're good to go. Yes, you'll be getting all the slides. So you'll have the slides and the video to reference, because this is not easy. And this last slide will drill it into your head about something. You'll probably have a laugh, but at the same time, you'll probably get it, right? So this is pointing up as well. This is the little green line here. This is pointing up. So we've got bullish momentum here, bullish momentum here. We've got a TK cross bullish, and our cloud is green and bullish, okay? So if I go for each of these aspects one by one, the cloud itself, when it's red, we ideally we don't want to look at that. We want green cloud. We want ascending triangles to play out above a green cloud, just like this, right? Or the green cloud being down here or here, and the ascending triangle form here, right? As long as it's above the green cloud, that increases our odds tenfold. The next step is this lagging line. So it's actually 26 candles behind the current candle like we covered the other day, which means from this candle back to here is 26 candles. So it's currently sitting here. Once it moves to the outside of that, once we get one more candle or two more candles this way, this will be out, and it's saying we're bullish again. So the amazing thing about this indicator, Matt, is it actually predicts price. So let me show you something. It actually predicts momentum. It predicts support, resistance. So let's say here, all right, it's 26 periods ahead of current price. See how that's 20 or 25 or 26? It should be 26. Yeah, I'm not sure why, but it's 26 characters in front, right? And it's telling you if and when price comes down, this is going to be support. As wonky and weird as this is, watch what plays out. All right, support. Watch. Support. Support. All right? And it's always predicting it in the future. So it's telling you when there's going to be a pullback to watch this bugger. I've had some amazing trades off this cloud. So definitely, I've got a tutorial video on how to use Ichimoku outside of the strategy on my YouTube channel. You're more than welcome to go have a look at that. But for what we're doing now, we don't need to know how to use Ichimoku. We just need to know how to find the lines and what they're doing. So one, we need to find this guy. He needs to be above or coming through price. We go a much, much deeper, Paul, in the market mastery course. Kyle will actually bore you to death. He gets so technical, it's not funny. But it's good. You'll learn a lot. When it's green, it's support, yes. Yes, so the red line is called the baseline. It's actually an amazing stop loss point, which as in the video I cover. But we'll move on from that. So we want this green line, the first one, to be coming out of or above trend, which is tick 1, right? The second thing we want, number 2, is the TK cross. So by default, this is your color scheme. You'll have a blue and a red line. The blue one is a fast covered, a fast paced MA is what we'd refer to it as. So it moves quickly. So maybe it's like a number 10 MA, whereas the bottom one's more like a 50 MA. So this one moves way slower than the top one. See how the top one's like rapid and all over the bloody place, a bit bipolar. When you get this cross here, while still at the end of this pattern, that increases your chances tenfold. So learning to find that alone is a massive key. If we're above the green cloud again, that adds to it. That cross here adds to it. This above price adds to it. Those three things will improve your success rate and massively for bullish trades like this, right? And then the inverse for bearish trades, but that's another time. So we'll come back to the slide. We don't need to learn the entire indicator for this. We just need to know how to read the lines, which is what I've just mentioned, right? There are three aspects we care about for this pattern: the lagging line, the Kumo, and the TK cross, which is what we just covered. Lagging line needs to be breaching previous trends to the upside or already above. Price needs to be above the bullish Kumo, which is the green cloud that we just saw. The recent TK cross needs to be in the bullish direction, right? So the base is below the conversion. It's like a golden cross, but it's more like an itchy cross, a TK cross we call it, right? Ideally, we want all ticked for maximum probabilities to the upside, okay? So it gets a bit bloody crazy if we go and add all this to the chart at once. It can get a bit out of control, but this last slide you'll understand why, right? When we get to this last one, stochastic. So, and then we add our VWMA. This is why it's got an 84% chance, because it's not just a buy this little dippy because my EMA says so. It's a data-driven trading strategy, right? So we want the VWMA as 30, and we're going to make that pink actually, and thick. So we've got that. I always color code, like I mentioned before. I'd highly recommend you guys get into the habit of that as well. So when you look at one of your own charts, you don't go, what the hell is that? You know, you instantly see the color and you already know what it is. So we're above all of the moving averages and the TK cross and the rest of it here. So ultimately, if you want to be super safe, that would have been your best entry. Stop loss below here. And then you can run this up. Ultimately, yes, you would, Mark. I'd go step by step just to keep it tick based and not just look. I'm at a point now I can look at this chart and go instantly, like I can see each of these aspects very quickly. But when you're learning this kind of setup, you should do it one by one. The more times you do it one by one, the quicker you'll get at it. If you go and look at your chart like this, it's just too cluttered, right? I won't try and dismiss that it's not. This is a lot on a chart, especially for a beginner. So one at a time would be great. Maybe you can do all the oscillators at once because they're pretty simple. They have to just be above 50 and below 70 or below 80 for these two. It can take a little bit of time. So you're probably best starting out on the hourly or maybe the 4 hourly trying to use the strategy. So you do have time to set it up and react. Because on a 5-minute or a 15-minute or a 30-minute, yes, they do, Alden. Yeah, they do. This exact strategy will work on any time frame, which is why I love it. It's fractal based. It's not like you have to wait for the 4 hour, the 8 hour, and the 12 hour to be in sync to take a trade, right? This is just a simple 4 hour one or a 1 hour one, and you just take it based on the data. Because this can do an hourly swing high and come back down before a 4 hour even opens or closes. Yeah, I'm watching it on another screen, dude. I am so heavy in IOTA. I'm loving it. Moving forward. 20 MA we covered already, so we'll just come straight past that. Next, this is optional. It's probably only for the guys that have got it. I'll go and just set it up. We'll get rid of all these indicators. We'll get rid of these drawings. This is only for the people who have got this. This is an optional part of it, but just for people who are watching who don't know this or may have it later. There's custom indicators you can get on TradingView. No, it's not yet Alden, which is a pain in the ass. Yeah, it's at resistance right now. It's going to have a bit of a chaotic time. The CEO of, the co-founder of IOTA just tweeted before saying they achieved some pretty cool shit. Nice, Paul. Nice. So we'll just go back to the step-by-step thing. For the people who have this indicator, this will increase your probabilities again. So there's two indicators, Pixel and Ocean, right? And we add these to our chart. Let me just find it here. Pixel Master. I think it's this one. And then this one, where is it? This one, dark. Right? Cool. So as we head into the end of the apex, I guess you'd call it, of this triangle, where it starts getting quite tight, once you've got the buy signal, a little green guy, that increases your probability by about 80. This is right up there. This really increases it. Once you've got that buy signal towards the end, it increases it tenfold. And then again, if the second indicator is orange on top. See how there's three different colors here? You got dark orange, orange, and black. As long as the bright orange is along the top here, it increases your chances too, because it's telling you the momentum is true. The trend is true, right? Where when it starts getting fucky, like over here, you start getting fucky behavior. But over here, it's calm, cool, calm, and collect, and the orange is on top, and it takes off. Buy signal, takes off. So when you apply all those indicators as a chick-based approach, you'll end up getting nice breakouts of this kind of stuff, which ended up being a massive win if you were able to take a bigger percentage of that. Yes, I only use default settings on Ichimoku. For me, I backtested the data, and the default one for me works best. The crypto settings, all it is, I'll show you right now. It takes 2 seconds. When you apply the crypto settings, this is the current 1 hour time frame, okay? If we go to a different time frame, I'm just going to bring this back to here, and the cloud will change, okay? Watch this. The cloud changes, okay? All the crypto settings does is give you the cloud and the lines of the time frame above that you're currently on. So on the 1 hour, all the crypto settings does is give you the 2 hour time frame chart. That's all it is. So what that does is keeps you out of small time frame drama, yes, but the results at the end of it actually work better off this, because the reason that the cloud is 26 periods ahead and the lagging line is 26 periods behind is for a specific reason, and that's not because these are moving averages and that's how they work. It's actually based off time as well. Ichimoku accounts for time cycles, which is why these numbers are the numbers they are. So it depends how dirty and deep you want to go into it, if you want to trade traditionally or not. But that's all that is with the other settings, right? Cool. Coming down to the trade, all right? Once all your variables are met, that's on the GT. I'll just refer you to the YouTube video of Ichimoku, because that's not part of this and I don't want to confuse people. Once the variables are met, you want to screenshot that setup, okay? Because while you're learning, maybe you stuff something up. So maybe you take a screenshot of each individual indicator when it's in its right point, if you wanted to use this strategy, right? Once you've got it, then take the screenshots or screenshot, depends on how good you are with mess on the screen. That way you can come back and audit it. So when this plays out bullish or bearish, we can come back and log or audit and work out what did we miss, or did we do it right and it just went against us, or we can just audit, right? If you can audit data, that's how you can improve. We enter on the third dip, stop loss under the second dip, right? Take profit at target 1, take profit at target 2, and that was based on the cheat sheet here. Really simple stuff, right? So after moving on from that, we want to log and reflect. So what we're just talking about, did it result in profit? Did the target hit? You want to log this data, right? You can log as much data as you want. You can log the time of day. You can log how you're feeling. You can log whether you're in an argument with your partner at the time. Log as much data as you can. And then after 100 trades, you'll start to see patterns in your behavior. And you'll start to see when you're a better trader than when you're not. If you're someone who's a great trader when they're angry, you want to be trading when you're angry, right? It's all about data and maximizing profit. So you won't actually know that until you log the stuff. Did you follow the step-by-step list by coming back to the list, or did you wing it, right? Assuming you knew the steps and missed one. So even myself, I might get carried away or miss something, and then I can come back and I can realize, oh shit, I didn't use the volume weighted moving average. So I didn't know if the trend was going to be as true as it was, because maybe that was dipping while the other moving averages were still moving up, right? So you've really got to go to the step by step and log it all. And then screenshot, oh, where are we going here? Screenshot the aftermath of the trade too. So once it's played out and it hit your stop loss or it hit your profit take that screenshot, because then you can audit, right? And then you can come back at a later date and audit as well. If you want to go back through this trade strategy in a couple of months and be like, okay, I'm going to audit all the wins and losses and go back through them all, then without the data, unless you saved it then and there at the moment, in that present moment, you're not going to have it later. So don't be lazy and make sure you've got a login system as well. For testing, like I mentioned before, is unique to the trader. You may be a much more emotional person than I am, and I probably fucking guarantee you probably are, because I don't really experience too much emotion when it comes to trading. That's because I use risk management, and my stops, they don't hurt. They're just small amounts, right? I stick to what works. well, usually. Forward testing is unique to the trader. So I really want to jam that down your throat. Forward testing is you personally taking the trade, setting it all up, and then allowing it to play out. A lot of people, what they do is they'll set up an amazing trade, and then a couple of hours in, they'll start manipulating their trade, start moving their stops, start getting emotional, and then they start fucking their trade up. And then before you know it, they're being stopped out at break even, and the trade goes exactly where it was going to go anyway. And you're probably all, or most of you, are probably experienced that constantly, where you've taken profit early, or you've broken even, or you took a small loss, and then it ran to your bloody target anyway. Chris, personally, yes, I would. That's because my own personal forward testing says I'm allowed to. Right? My own forward testing says I'm allowed to. So forward testing is unique to the trader. Make sure you've actually tested this and see if it works for you. This kind of setup isn't for everyone. Can you draw this up on IOTA 1 hour chart between 27th July and July ascending? I can go have a quick squiz, dude. IOTA, oh, she's breaking up. Let's just duplicate this chart. Yeah, you probably will need a bit of a pay, maybe at least an entry level paid version. We just got an alert. What was the alert for? A bull div. So a bull div just went off. That alert from before. Let's go check that out real quick. That indicator you guys can get free access to just went off, and it said there's a bull div. So if we bring up RSI on this indicator, sorry, there on this chart, you should have a bull div, or it's flashing a bull div. Tripping balls. Oh, hold on, I might have to use this. Yeah, here we go. Cool. Look at that. 2 1 hour bull divs here, guys. That indicator is amazing. It'll save you a lot of time and headaches. And when Kyle teaches you what he's about to teach you, you're going to love this indicator. Down here, once you're in the Discord, find this channel here. Once you've found it, just put your TradingView username in here. Okay? And then I'll get that added to your TradingView account. Okay, cool. We'll get out of this. Go back to, someone said IOTA when? 27th July and 29th July. Is it this year? Just recent? On the 1 hour. See if I can find it. Must be this year. I mean this price action. Mr. IOTA dude, do you mean free here? This thing? Who was that? Phil. Okay, all right. Let's go real quickly. Smash this out. All right. I'll show you how I'd usually approach this. It's been in every email, Blaze. It's been in every. I can put a quick one in to the chat. https:/discord.gg/Bitcoin. I got the vanity URL. Catch you later, Mark. Cheers for coming. All right, so let's say this is our ascending triangle, and we're going to set the trade up. All right, on IOTA here. Beautiful, beautiful trade here. All right, so we've got our horizontal somewhat top right, however you want to approach that. It's, like I said, it's more of an art form than an OCD. Okay, so now we're going to smash those indicators on. We're going to want the VWMA, tick that guy. We're going to want the MA, we'll tick that guy. We want stock, both RSI and non. We're going to want just RSI. And then we're going to want Ichimoku. All right, and oh, what have I done there? Close that. Come back to that. This one. What have I done here? Cool. All right. Where did that go? Oh, we're on the 1 minute. I just stuffed that up. 1 moment. There we go. Cool. Cool, cool, cool. All right. So we want to go and edit the values of our moving average. First, that goes to a 20. For me, I always have it as blue. Make it a bit thicker so we can see it. 30 for the VWMA, volume weighted. Make that pink. Make it a bit thicker so you can see it. All right. Next, we're going to get the horizontal line. Smash that on here. Make that 50. Right. Rinse, repeat. Throw it on here, 50. Throw it on here. So what I'm doing is I'm clicking first, right? And then it applies it to the chart, and I double click it again. And then it brings up the options for it under coordinates, right? So what we're doing is going to get that data. okay, we're above all of those lines. See how they create this massive support here, right? And we're getting pin bar after pin bar here. What you can do if you've got one of the paid versions, right? You can come up here and you can actually go create template, and we can call this 84%. All right. We can remember the symbol if we wanted to, or the interval, but we don't do that. We're going to save that bugger. Now what we can do is come back up to this button, indicators, and find 84%. Here he is. We can favorite that. So up here, we got the number 8. Now what this does is we can get rid of all this crap. Now watch this. We just press the 8 and it applies it all on the chart instantly. Then what you could do if you wanted to is just hide them one by one. So it depends on which version of TradingView you've got, is how you can go about that. For me, I usually have templates, which is why I've got a bunch of them up here. That'll save you a lot of time if you've got one of the more the paid versions. So let's identify our fractal, right? And let's take this trade as a fractal from here to here, right? And then we'll go from the measured move 2 and measured move 1. Measured move 1 is clearly from here to the top. We're going to say here, right? Make sure we're on linear. Make sure you don't have that on. Make sure you get that right, because it'll warp the results. Come up here from the point of break. Okay, so that's target 2, which is where it ran to, right? You can see that's where it fizzled out first. There, right? That's target 2, and then this is target 1 from the furthest point down here, right? So it's going to be quite similar to target 2, I guess, but from the point of break, we'll say about here. That's target 1. And if we wanted to, just to add confluence, I'm going to get rid of these guys down here. Actually, no, you know what? Let's just add those lines in and make sure we tick all the boxes. I can see they already does, but let's actually do it. Should have left those on before. Sweet. And IOTA just keeps pushing. It's amazing. All right. So we've got our little triangle boy here. I'm going to draw this in, right? Top of it, bottom of it. Towards the end, we want to see it claim support. We'll just clean that bottom line up. We want to see it hold or claim support here, right? And claim all those moving averages and the rest of it. We want this above trend. So we go 26 candles back here from this, maybe this pin bar there, 26 back. There. All right, so it came out of trend right there, which is what we were just talking about the other day with move contracts. Look at the predicted volatility here. Bang. It's the same reason I said Bitcoin was going to break out. I think it was last week or this week. I don't remember. When did it break out? The downside to trading full time and like having no responsibilities is your time just no longer is a thing. You don't know what day it is. You don't know what year it is. It gets out of hand. So we're above the green cloud here, right? This has been pointing up. That was above price. We zoom in and turn these moving averages off. We can see the TK cross. So the TK cross happened here, right? At support, perfect. So that's Ichimoku all ticked off. Ichimoku bullish, bullish, and bullish. Easy peasy, right? You don't need to know the whole indicator. You just need to be able to notice, like, see, there's a big cross, came out of price, and this is all green and up, all right? Easy peasy. Next, moving average. We reclaim that here. So that'd be your entry candle, the pin bar. And Kyle's about to teach you about those next. Amazing candle, all right? We're above that. And like I said at the beginning, it holds you and brings you up. So I hadn't planned this ascending triangle. This is one of you guys' ones. And you can see the same thing played out. And then the VWMA, right? Same again. So that was your entry candle. Those two pin bars there. Ideally the second one, because the 20 MA likes that one better, right? So that there is your entry. So now what we can do is get rid of that crap, hide those. We've got the point of break. Let's circle here. All right, we're above the 50, between the 70, but above the 50, perfect. Above the 50, between the 70, perfect. Above the 50, between the 70, perfect. We now have an 84% chance of breaking to the upside because all boxes are ticked after that pin bar candle was printed, right? So you'd enter here and then your stop loss. So you'd enter on this candle, maybe on the open of the next one, just to, we're not going to be heroes. And then our stop loss would be under the wicks of the second touch, which is this guy. All right, 1, 2, 3. And there's our stop loss and our target and target 2. Because it ticked all boxes perfectly, and it does look like a bull flag in a bigger picture as well here, we're going to chase that target 2. Because there's like I think that's an actual trade I've taken. So cool. Massive, massive return. And it's giving you where you're actually taking profit, not hoping for. The data says that was going to be 84% of the chance was going to be the case, right? The next step, what we can do is just add those fibs we talked about before. So if you're a fib trader, this will help you as well. From the low, right, to the high of this. And then I always use the coordinates and drag that across. 300, we'll go 330, right? We get rid of this P&L. And which way the 618 hits, I'm not sure. Yeah, perfectly where it tops out the first time. Tries to hold, bounces off, launches. Beautiful. So what this tells me, if I was taking this trade earlier as well, this was an area of interest. This was like an area of resistance because you both had a measured move from fractal traders, and then you also had the 618 move from fib traders. So this is going to be a fucky zone. And you can see that's exactly what happened. I lost momentum here, didn't it? So everyone was taking profit here from this little setup. But the bigger guys who have the long-term targets were probably buying this dip, and they probably won't take profit until up here somewhere, right? Or they're probably already in from all the way down here or something. But that wraps up the recipe to make money, right? But it doesn't always play out exactly how it should. This is a market that can go both ways. And because if you're trading the crypto market and your coin is looking amazing, what if you're trading this on looks amazing and Bitcoin decides to go and have a moment that can fuck your trade? All right, so that's always something that you have to take into account. Yes, this is a strategy that will work on any market, dude. The only downside to this VWMA, I got to show you this just so you guys don't go, what the fuck later, is because it's volume weighted, there's not volume on every single market. So this bad boy won't actually appear or work on some markets. I'll just make this nice and visible. But if we go through my list, I'm pretty sure, like this market here doesn't have volume, I don't believe. The DXY, there's no volume. US 30, no volume. So that indicator doesn't work on this. All right. ES1, it does work. Look what happened when it lost it. Jesus. All right. Fantastic indicator. I'd highly recommend go down that rabbit hole and learn that guy. Even if you don't use the strategy, play around with that little VWMA. All right, the last slide, and then I pass it on to Kyle. There's two. All right, this is from the complaining guy's state of mind, right? This is what I can hear maybe other traders saying, or maybe other people saying. So this is to respond to the naysayers. All right, there's too many steps. I can't get my head around it. All right, that's fine, Wojak. If you don't know who Wojak is, that's this guy here. He's a wage cuck, and he works at McDonald's. All right, go back to McDonald's and serve the customers. You'll get no sympathy from me. All right. You need to learn that this is a job and you've got to do work if you want to make money, right? This is not a get rich quick scheme. This is a long over time strategy that will help you get ahead as long as you stick to it in a bull market with the green cloud, the forming above the green cloud and the rest of it. All of these things have to come together to create that atmosphere for that percentage outcome. You can't just find an ascending triangle, add half of these things to it, and then hope it plays out, because that's not how this works. So don't be a wage cuck and do the work, all right? Nothing comes easy in life, and if it does, it's usually too good to be true, right? BitConnect, USI Tech, Ozcoin, right? Come back to this. Clicking a few buttons on a computer can earn and lose you money. This recipe of price action plus data equals you earning more often than not. It's still far easier than most people's day jobs, right? So all those indicators we just went through, it took me, what, 2-3 minutes once I did it on IOTA to smash through that. Once you get to a point like that, that's no longer work. When you guys are first learning this from the beginning, it's going to be a little bit of work. But if you want to be Wojak and you like McDonald's, then don't learn it, all right? This is a free course and it only costs you time. But if you want to get ahead, learn to be disciplined, learn to take that trade every single time. And when your forward testing data says you're shit at it, don't take it anymore. All right. So just be realistic, be human, don't be him. Unless you don't like doing work, then McDonald's is probably always hiring, except for during COVID lockdowns. To me, anyway, who doesn't love a good trade playing out exactly as you assume because the data backed your thesis, right? There's nothing better. Ask Kyle. He's the most clout mode guy you'll ever meet, right? When it comes to a winning trade, he'll send you 10 P&L screenshots in a row, 1,000% saying, I told you to take this trade, you dickhead. Right? Amazing trader, loves to rub it in. Right? So let's be real here. A little hard work, navigating some squiggly lines, because that's all we're doing, right? Could be the difference between serving customers at McDonald's or having a genuine side-made income from trading, right? It's work. It is work until it becomes play, so master it. This is one of the many strategies that will allow for that. Put in the time and effort to learn each requirement of this. It's not going to be easy, but it will be worth it. It took over 40 people. So listen, this is 40 people, individuals, all submitting data over a combined 75 man hours to create this recipe. All right. So it's not just some pulled out the ass strategy. It's not just some, I brought it from someone else and now I'm reselling it like other body traders out there. This is a homemade recipe that works. All right. The hard work has been done, the back testing. All right. Now forward test this and keep that risk appetite low. No degenerate behavior. Okay. So forward test, use very minimal money when you do use this. You've got to put something on the line or it's not forward testing. All right. That's just paper trading. The paper trading is very easy. All right. If you take all of what I've just shown you in this video, plus these slides, which I'll give to you, you will have a working strategy. The downside of this strategy is these fractals don't happen every day, right? But they do happen on every time frame, on every market. So you can go hunting for them, okay? If you liked what we've done with this, then just to touch on what Kyle started on, that bootcamp we covered, it's more in depth than this, okay? It's worth checking out. Kyle showed it pretty well before, but we cover all of this stuff here in depth. Okay, so check it out. Kyle's offering a 20% discount offer at the moment, which is massive, till the 14th of August. Cool. All right. Is the course completed? No. So it's 6 videos. Sorry, no, I think it's 12 videos over 6 weeks, but the weeks don't matter anymore. It's 26 hours of content that you can watch over and over and over again until it comes in, like until you click. Because some people might click it straight away, where other people might have a really hard time. There's trading strategies for short term, mid term, and long term. So if you're someone who wants to trade maybe 2 or 3 times a year, we cover a trading strategy for that. That is the main course. All right. Bloody hell, go and take this strategy, take a cheap small trade, and it might even cover the cost of this bloody thing. It's probably worth checking out.
Yeah, that's
other
the
than
main
that,
course, Alden.
You can use that strategy on all markets, Emilio. Stocks and MACD, they're not similar. I do not use MACD. Some people do. One of Kyle's strategies that he runs does incorporate the histogram of it, and it is a pretty solid strategy. I personally don't use them, so I won't really comment. Other than that, I'll wrap up, guys. Thank you for listening to me rant on. Don't be Wojak, right? Put in the effort and become profitable. Don't be Wojak. Cheers, guys.
Love it. Round of applause. All right. Very good stuff, Troy. Very sensational. Tony loves it. Awesome. So now we're going to go into some stuff that's more price action based trading. One thing I will say about ascending triangles is I do get some absolutely unbelievable trades from ascending triangles, especially when Bitcoin's in a bull run. typically it just goes like, and the market's really bullish, it would just be like ascending triangle, pump to like a falling wedge, pump to ascending triangle, pump to ascending triangle. And you can trade them on all time frames. Like we were just looking at one that took a little while longer. It took a couple of days to play out that one. I think you're mostly on the 1 hour time frame, right? But you know, though that exact same pattern will play out like 4 or 5 times in a row on the 5-minute chart before you get to like a bigger one. So, you know, if you trade when Bitcoin's in a bull run or it's moving really aggressively and you understand how to trade these triangles, you can have, you know, your longer trade open on one account and you can have a scalping account open on another account and trade those bull flags one after another. You get really good at them really fast. So yeah, good stuff. Pay attention. We're going to go into some price action trading now. It's a little bit more advanced, and we're also using oscillating indicator. So people talking about the course at the moment. Troy just gave us the link. I'll take you to the site quickly, guys, if you want to check it out. This is what it looks like. So you just take you to this page, and you just click in here, go add cart, and you got the coupon code here, and you go save 100. Click on that. And then you can pay directly with PayPal through there. I'll proceed to checkout, and you can pay in Bitcoin. You can pay through PayPal. You can pay with through Stripe, which is like Visa or American Express credit card, debit card, and then bang, and you're good to go. So that's pretty much it for that. But yeah, this is a pretty epic course. Pretty much got everything me and Troy have worked towards building. That we work on every single day over, you know, I mean, I've been in markets for 11, 12 years now, something like that. And Troy's been, you know, probably at this for 4 years now. You've been trading full time. So there's some unbelievable content in there. And, you know, it's been really good to see a lot of guys go from strength to strength. So highly recommended if you want more from this than what you've gotten so far after next Tuesday. So let's get on to trading SFPs because it's probably one of the most important things I think everybody needs to be able to learn is how to actually, when you should actually be entering a trade, right? And try and stick to the 1 hours at the start. Sometimes, you know, you can get these on the 5 minute and stuff like that, but sometimes you get them on the 5 minute all the time and they don't actually play out. So you want to be able to identify the specific candle setup, which is a pin reversal candle, right? Which, let's go have a look here. Pin reversal candle is a candle that has a small body like this and a long wick, either to the downside or like that, right? Which would be a what we call a bull hammer a lot of the time as well. And then we can have the other types, right, which are like this. And these are usually top candles, and more often than not, they're actually red as well, right? And they've got a big wick to the upside like this. And usually you'd find these at the top of, these ones are usually at the top of a range, right? So put it up like this, and you know, you would see it like break above a key level. Like this is an order block through here that's a really key level, right? And so you have trading above the key level, and then price gets rejected from being above that, and then we swing back below it. So yeah, it's called a swing failure pattern, right? And then the same with the downside, right? So let's just say that this is our candle here, and we swung below this key monthly level, right? Broke below that. And so the candle at that time would have been trading like this, and it would have been red, right? Or this is what it would look like. Be a big fat red candle, right? Just like that. And what then happens, it might come down and tag a support level like this, and then it starts to go back up. It leaves the wick behind, and then eventually it will flip back above the open price of the candle, and it will turn into a green candle, and it might close something like this. Maybe even go up a little bit more, and then, you know, it starts to get pushed back down. And typically what happens is, you know, there'll be a candle like this that will precede it, and it will be a big red candle that will go into this one. And then the candle coming out of this might be a big green one like this. And so if this candle comes at least 50% of the way up, and you can just get your Fibonacci tool out for that if you want to measure it, right? So the 50 level is here. So if we close like this, something like that, especially if you get above the 0.618, chances of this playing out with continuation and it being an actual reversal pattern are pretty high. And so this, what I've just drawn for you guys, is known as a morning star reversal pattern. You definitely want to be able to identify that because on Bitcoin especially, they play out all the time. I'm going to show you a whole heap in a minute, right? On the 5-minute time frame, we've actually got one that's here, but it didn't really get that much continuation on it, right? So on the 5 minutes, you sort of need to line them up with other things because you can get Morningstar reversals and they don't really go anywhere, which is why I want to line them up with bullish divergences as well. We can see this has been bleeding out, giving us heaps of bullish divergences on the 5-minute, and price hasn't reversed yet. And that is because on the higher time frames, price action is still bleeding out. So we've just had a really big a really big bear div, a bearish divergence, which is from here to here. All right, we can see this. Right, so this was our peak here. If this is freaking you out at the moment, don't stress too much because we're going to explain oscillators as well. Right, so we have a top here, right? We have a top here, and so the price action is going up, right? Then we have a top here and a top here, and the chart is going down, right? So that's called divergence because they're not going in the same direction. So RSI and price should generally be going in the same direction, but when they start to diverge and RSI is going back down and price is continuing to go up, that gives the indication that there's going to be a reversal and price will start to break back down. The only caveat that you have to really stress on this is when the market is quite bullish, you're going to get a lot of bearish divergences and price will just keep going up, right? So try not to take them, too much like, it's the be all and end all, but just sort of you can be aware of them when they're starting to play out. But what the key thing you want to be looking for is when you have a swing like this, right? And the ones that go like that, they're not really the greatest, right? You want ones that have a big swing and then a big swing away and then another swing back up, right? And we go like that. And then we get the bearish divergence like that. So we make a higher high, right? So trend is up, right? So one high, second high is higher. And then our indicator will be doing something like this. It'll be going up like that. Oops. Right, the indicator will be going up like that. And then it will come back down and have a deep swing away. And then it will be really weak when it comes up again for the second rally and then rolls over, right? And then we'll have the bearish divergence. So you can see how this high is lower than this high and this high here is higher than this one. So if we bring these two lines over the top of each other, they're diverging. They're going in the opposite direction to each other, right? So important to understand that, right? Because so that's bearish divergence. And then obviously the other way is bullish divergence, right? So what we're looking for is when we combine a bullish divergence with one of these candlesticks, right? So for example, if we have the market that looks like this, where we have so prices coming down, it's collapsing, and we're putting in a low, right? And then we have a nice swing back up, right? Looking good, and then it does nothing, it just rolls over. Then we have another swing low like that, right? We might get a candle that looks like this, all right, at the bottom here, that breaks through our key level. Whoops, right? Breaks through our key level, right? So let's just imagine price action back here has bounced off this level a few times, right? Or there might be some wicks down there or something like that. And then we have, let's just say that this in here, this red band is oscillator box, right? So we have the low that goes into being oversold, right? Right, so we come down, we have the low that goes into being oversold, and then it comes back up like this, right, for the peak, and then rolls back over. But now the low here isn't as deep as this low here, right? So we can see that this is where the low is through here. Right, I'm gonna make this green, I'm gonna make this guy blue. So price action will now be blue, right? And the divergence is going to be green because it's bullish divergence. So we're looking for when the indicator actually makes a higher low, right? So this is our first low, and now this is a higher low, but then the price is actually making a lower low, right? And then we get our swing failure pattern, because this is the swing point, right? So this key monthly level is our swing point. So price came below here and then got rejected from being low, and buyers stepped in, right? And pushed the price back up, right? And then we close above the support level. And so now this, in combination with our bullish divergence, right, gives us a lot of clarity that this is most likely is going to lead to a rally. So what we do, as soon as this candle closes, you don't want to be getting in on it when it's open. And sometimes I do get in it when it's open, because I might see it like this. And I'm like, it's a really important level. And I'm like, this is bounce. It's definitely going to close like this. It might be the last 10 or 15 minutes of a 1 hour candle or something like that. And I think it's going to keep going like that. And I'll just get into it anyway. And if it starts to break down, it closes like this, or gets ugly, or closes back below the resistance level, I'll just get out then. But that's the only time I ever really do it. When you're first learning how to trade these, just stick to the rules, right? Once you know and you have mastered the rules, then you can break them, right? So you wait for the close of the candle, and let's just say that 1 hour closes like this. I'm going to put my trade in. I'm going to be entering the trade when it closes, right? And then my stop loss is going to go below here, right? Right, so I'm going to have a 2.04. I might just stretch it down just a little bit more to give me a bit more space, so that just in case this comes up and rolls over one more time, I'm not going to get stopped out like that and get SFP'd one more time. Because sometimes it will go for one more dip and you get stopped out, right? And that's pretty much the rule. That's like, general rule for life, right? You learn everything back to front, and then, you follow the rules really well, and then you learn it so well that then you can start breaking rules because you sort of mastered it. That's my theory anyway. Right, so you want to give a little bit of space on these, because, sometimes a market maker will wick everybody out one more time just to be a prick. And then, you look for the next support level. So generally what we're going to do if it's just a swing failure pattern by itself, we're going to be looking to take profit at FTA, which is the first trouble area, right? Which, you could argue is this point here, right? Next order block, of course, it'd be this point here, right? So you might go target 1, right? So T1 is going to be here. And now target 1 has a pretty much, like, these play out very, very high percentage in an amount of time to T1, right? And only to target 1. I'm talking like 90+% of the time when you get a swing failure pattern, like a good one, it will hit T1 about 90% of the time. It's very rare that you get a nice SFP and it closes and it wicks everybody out. And then it just sort of goes nowhere and then just, nukes. Hardly ever happens. But sometimes the T1 isn't really that far away, right? So this one is actually a decent sort of trade setup. We've got a 1.33, which for an SFP is pretty good. So I'd 100% be taking that trade every single time. So for this example, what I might do is I will double the amount of trade size that I'm going to put on. So instead of doing 1% risk, if I get stopped out, I'm going to do 2% risk. And so that enables me to take profit when I get to target 1, but still have another 1% of risk on the table. And then I can take profit up here at take profit 2. Is there any indication that you can give an alert when SFP happens on whichever coin is applied to? Some people have worked, I think Troy was working on, or actually has an indicator which tells you when there's been a pin candle, which is like this candlestick shape here. But I'm not sure it tells you if it gives you the SFP as well. It might like highlight it if you get the SFP. Can you get an alert on that as well, Troy?
Yeah. Pin bar and SFP. Yeah.
Yeah. Okay. Nice. So yeah, that's pretty handy if you can get that set up and you can get it to tell you. Sometimes it's probably not going to pick out the best levels because you got to remember it's a computer, right? So you can't just be like turn it on and be like, oh my god, I'm going to trade 100% of these. Right? You have to use your brain a little bit sometimes as well, right? So let's go and we're going to take a look at some setups, right? So I've got a whole heap drawn out at the moment. Actually, I'm going to show you the one I have on the slides first. All right, so if you want to take notes when trading an SFP, the first step is identifying a key level, right? and usually a range low or a range high, right? So you know how Troy was looking at the ranges before, especially when we're looking at Bitcoin at the start. A lot of times you'll see swing failure patterns of the range low or the range high. And the reason why we get these is because price is testing below the range for buyers, or it's testing above the range for sellers. If you get a whole heap of sellers when you get above the range, it's going to push it back down. And then everyone's going to go, okay, it's rejected from breaking out. And everyone's going to jump on the trade and short the shit out of it. And then it dumps, right? If it breaks out and there's buyers above the range, then it's going to keep running and it's going to take off, right? The same happens to the downside. Price might be testing to the downside of the range, and it tests and it finds that there is a lot of buyers willing to buy below the range, and then it pushes back up inside the range. And when you reclaim that key level, then price takes off, right? So the most important thing is in learning how to trade swing failure patterns is level selection, right? You don't want to be taking shit levels in the middle of the range and stuff like that. You want to be taking from the lows, and you specifically want to be looking for when other traders in the market are going to be getting stopped out, right? So if you're the sort of person that gets stopped out all the time, put a box where you would normally put your stop loss, and that's probably where people like me are going to be entering our trades after you get stopped out, right? Sorry if that sort of hits home, because I know for a lot of traders that's generally what happens, and it's because new traders in the market, like where textbooks tell you to put your stop loss, it's really fucking obvious level, and so more experienced traders, they deliberately hunt those stop loss areas, and we call them liquidity pools, right? That's probably getting a little bit advanced. And so what we're looking for is a wick below the level and a candle closing above, right? Usually closes a pin bar or bull hammer, which is a candle shape that I just showed you with the long tail and the small body, right? And it could possibly then form into a Morningstar reversal candle, which is the 3 candle pattern shape that I just showed you, right? Trading bullish divergence, right? Which is the oscillating indicator that we just went over, right? Which is when the RSI makes a higher low, right? And price makes a lower low. So that's for the people who like things written out. So here's a really good example on gold, right? This is a 5-minute. And you'll find that in legacy markets like gold and the stock market, every single time price changes direction, you pretty much almost get one of these candles. I'm talking like fucking out of control amounts of time. Almost every single time you will get one of these candles when price finally flips the direction it's going in, right? So it's important to know it will make you shitloads of money, and that's why we call them an entry candle, right? So here's a good example here. So we have a swing low here, and then we pull back, have a swing high, then we come back down. We sweep the lows, right? So anybody who's trading this, they're trying to scalp and stuff like that, they might have entered in here because it's a nice rounded bottom. There was also a bullish divergence through here, right? So people trying to trade the first bull div by itself probably would have got wrecked on this one because you have a really aggressive selling candle, right? We sweep below this, so people who had entered here, they'll be getting stopped out here. They'll be going like, oh shit, this is going to roll over and dump. That was a really big engulfing candle because we just took out 1, 2, 3, 4, 5 up candles with 1 down candle. And it looks like I'm about to get wrecked here. And this is actually the open as well for the New York Stock Exchange. I just opened on this candle, right? And so New York opened and they started buying. This candle basically got solidified. It got closed after its 5-minute opening time, right? As a really nice bull hammer with the wick below the range. A lot of traders would have dumped their trade in that or got stopped out. And so that means that when price starts to reverse again, all the people who are trying to get long here and probably long back here as well, they have to re-enter the trade to try and catch it because they've just been stopped out or they've puked their trade. So that pushes price back up as well. Then anybody who's shorting because they've just seen this huge engulfing candle and then they're seeing prices now below the previous low, and they're all thinking, shit, I'm in a really bad position here. Now I have to close my trade. And when you close a short trade, that means that they're being forced to buy, right? So that's going to push price up as well. And that's why all those forces I just explained then, right, along with the bigger players in the market are pushing the market up as well. So you have 3 different types of traders all pushing the market in the same direction. That's why you get that really explosive growth from these. And you can see it takes out the first trouble area, which would be this level through here, very quickly within 3 candles, and then it actually flips that level. And I'll show you the result of how this ended up turning out, right? So this is the trade set up here, right? And then this ended up playing out. And so from the entry, right, so you'd enter like this, just give a little bit of space. You always want to look left when you're setting your stop loss, right? And if it helps, you can use a horizontal line and put it through, right? And just see where you're entering your stop loss. So you probably want to be below this level here, right? So just drag it down a little bit because it's a really tight one anyway, right? All right, so you want to be below this level here at least. And you can see actually this level through here is what we ended up bouncing off, right? So you always want to look left and see what's going on because it will help. Right, so the FTA, you're getting a 1.55 risk to reward on that, which is a nice little trade, right? So this is FTA, obviously got hit pretty quickly within a couple of trades. Oh, sorry, a couple of candles, right? Then we end up support resisting, flipping that level and pushing much higher, right? So if you took the trade all the way to 1,900, which I think is probably a pretty obvious level. You know, this is 6.18 risk to reward on your R, we call that, which is an epic trade. That would mean if I was going to lose 1% of my account, if I get stopped out, it means I'm making 6.18% of my total trading account, which is pretty nice risk to reward on that. Is that an Elliott wave? Yes, that is an Elliott wave, actually, right? I don't really trade that many Elliott waves, but you can't deny that this is not an impulsive Elliott wave pattern through there with your 1, 2, 3, 4, 5. So yeah, good spot. And yeah, that's pretty much it. You know, another obvious place to take profit would have been at this high here as well. So, you know, for me, I actually didn't take this trade because I wasn't trading gold or really looking at it, but I reviewed it afterwards. It took off and I was like, wow, that's actually a perfect example about what I'm going to teach next week. So played out really nicely, but I would probably be looking to take most of my profit off at this level here because it's just quite obvious. And then probably would have been, you know, there's a thing that people talk about in regular markets called the Hundy roll, and it's typically when you get close to hitting like around 100 number, the market will find a way to get there and push it just to test it and tag it anyway, right? All right, somebody's asking questions, Q&A. Answered, no, all good. All right, we'll keep going. All right, let's go find some other examples. Here is a 4-hour bullish divergence on gold, right? So really nice one, right? So we've got price making a low here. All right, so we've got a first low here, and then we've got a second low here, and then we can see the indicator giving us the bull divs through here, and then you know, we're going a really nice run throughout here, right? And then this is the key level here that we end up SFPing. Right, so this is an amazing SFP. I would usually like it to take out this one as well, but it doesn't always happen like that, so you need to stay vigilant. And we can actually see that these ones get swept as well when we perfectly close above, right? So that's the sort of thing that I'm looking for. We sweep this low, right? And we sweep this low as well. While this candle was open, this one here, there's going to be a lot of panic selling going on, right? And let's just go and I'll show you what it doesn't really look that, you know, end of worldish because you can see what happened afterwards. But when we get this guy out here, right, and we're looking at it like this, and now just imagine that this candle here is this big red thing, right, down like that. That's what traders are looking at, and they're like, and they're thinking, holy fuck, like if I'm going long here, right, if I'm long from here, I'm looking at that, I'm like, oh, I've done my ass here, I'm fucked. You know, this thing's going to nuke. You know, the 4 hours not going to hold up here. It's not going to close as a bullish divergence, and you know, I'm expecting, looking at downside targets, the next support level is probably here, right? This is what I'm looking for, 637, because this is just getting absolutely nuked, right? Then this happens, and now we close above both supports, right, after being below, and I've just puked my bag, right? Then we have a couple of other candles that wick below, right? It's probably a little bit too far. And then we start to get the reversal here in combination with our bullish divergence, right? So now it's telling me as soon as we get the green candle here closed, right, we get our second bull div. Now it's telling me that there's a high chance that there's going to be a reversal here. So how I enter that trade, so I would go like this, right? My stop loss will be below here, right? I want to keep it away so I don't get wicked out by $1 again or something like that. FTA on here is going to be to there. So you can see it's a 0.74 on this trade, which isn't an amazing one, but you got to remember that even though it's a 0.74 risk to reward, the strike rate on hitting FTA is extremely high and it's above 90%. So I would still probably take that trade anyway, right? Double down, T1 here, and then probably T2 up here, right? And you can decide looking at the larger time frame pattern if you want to stay in this trade for longer or not and how it's going to play out. Right, and then obviously we get a really nice bullish continuation and then it goes up to ridiculously higher, right? Yeah, and then also, you know, you've got the other pattern here as well, which is the broadening descending wedge. Good spot. And a lot of times you will get these sort of things, right, at the end of a big pattern, right? I'll show you another one on Bitcoin in a second, which is a falling wedge. And it goes like this, right? And we go like that. And then we get the bull div in here and then it takes off, right? So if you use these setups to enter, it's going to help you get into position a lot earlier. We were talking about in Discord yesterday, we were talking about the Bitcoin play that was sort of looked like a symmetrical triangle, ascending triangle started to play out. We're talking about getting faked out to the upside and getting SFP to the upside and how to avoid getting caught in a false breakout. And the best way is by getting into the trade way before it breaks out, by having an entry strategy to get you in at the bottom rather than getting in when it's breaking out, because then you have to get in when it's dangerous and you just lose so much more percentage of the time. Because let's just say, you know, this was here, right? Let's go back even further, right? And this ended up getting rejected like this, right? My entry is here. Right, if I entered on the breakout here, I'm done here. Like I'm stopped out now. Do you know what I mean? And like this is why so many younger traders get wrecked, because they wait until the breakout, then they enter on the close of the breakout, and you're entering at the high after we've just had like this huge rally throughout this point throughout here, right? So yeah, Trader Dante, yeah, he's pretty good, but he doesn't use divergence though. He only uses the SFPs. So yeah, adding divergence to it just makes it a lot stronger. So let's go and have a look at Bitcoin, because I've got some good examples for you. Right, and then when you add things like order blocks into this as well, it just becomes fucking elite, right? So this is a really good trade that I got at the start of the year. You can scroll up in Discord and the post is in there. And you know, price action here just looks beautiful, really nice falling wedge. Comes down. We have the SFP through here. I mean, it's not a great one because there's not that many wicks that have been broken, right? But we still swept those lows through here just to the right, and then close above in a nice bull hammer. And then we come back down for the bullish divergence. Then we break out of the falling wedge, and it gets sent. And what you'll notice is that the bottom of the bull hammer doesn't get taken out. So even if we enter the trade like this, right, the bottom of the bull hammer doesn't get swept on the pullback before the breakout. And you'll find that when you do get these, you know, sweeping wicks like this, a lot of the time, that's how it ends up playing out. How do you get the order blocks? They're taken from the weekly time frame. Troy just did a video on that today, so you guys can check that out on our YouTube. But basically, they're taken from these. So this is an order block here, right? And then you take it across. See price comes up and tags that level perfectly and then breaks down. You can see here on the weekly, we close perfectly below this level here. 1, 2, 3 tags the same level. Now I've come back up to that level and rejected from it as well, right? This is a nice one that we're sort of playing with at the moment. So, you know, high chance we bounce in between this for a bit and then break out like that. This one is sort of taken from this one here, but more this candle here. You can see ends up being support here, resistance here, and sort of a little bit of resistance there. But they start not to work as well after a little while. But, you know, your first couple of tags are usually pretty consistent, right? And then this one here as well, right? For when we came back down from the all-time high. And I'll show you one of the reasons why these, I might just duplicate this page actually, so I don't mess up my chart. We'll go to weekly. Right, so let's take a look at this. Where is my replay tool? Here we go. All right, so why do order blocks work? So when you're looking at this, right, we have this huge parabolic rally, right? And, you know, we've finally topped out. Let's say we have one candle like that. We're trying to work out where the price is going to go to next, right? It's very obvious that there's only one spot in the entire rally up through here out of like 14, 15, I think it's like 16 candles or something like that. The price actually goes the other way, right? So that is going to be a magnet for sellers, because people are going to use that as a target. People are going to use that as a support level. So this realistically is the first level of support. So what we do when we see that happening, we get our rectangle, we put it through like this, right? Make it a little bit clearer, transparent. We're going to make it green because it's support. And then we watch price come down and tag it. And it just does it over and over and over again, and does it on all time frames. See, perfect tag. And that's why we say the box protect. Because this is usually just how the market works. We'll hunt down and find these levels of support and resistance. We'll just bounce off it multiple times, right? So you can see buyer stepped in here, buyer stepped in here, they step in again here, right? And, you know, you can say, oh yeah, you know, that just happened that one time. I'll show you on a different time frame, a completely different area of the market. And, you know, if you want to, you can go and test this on the 5-minute time frame, because especially when the market's bullish and you're getting those ascending triangles like we were just talking about before, a lot of the time the market will do it and it will come back to these levels all the time, right? So here's pretty much exactly the same situation. And this is where we're going to draw our box this time on this one. Let's just watch how this one plays out. Right, comes back, tags it again, right? Tags it one more time, and then we finally break through it. So yeah, and that's why we use order blocks. And, you know, we could go really deep into it, but if you want to find out more about it, we go into like how to draw them, how to identify them, all the little different tricks to get the right actual blocks in the course. There's like a 2-hour session on it. So if you're really keen, you can probably go do that. And also Troy did a free, you know, I think it's like a 10-minute video. He might have to re-upload that though. It's on our YouTube channel. So go to YouTube and type in Market Mastery, and you should be able to find us in there. Right, I'll show you the same setup on the daily time frame, right? And it's right here. So we can see we came down, tagged the key level, right? This is the SFP through here, right? And then this is the daily bullish divergence. And that daily bullish divergence and SFP, right? You can see how bullish it got as soon as the SFP was in, it just exploded. And like, look at that daily rebound of that candle, you know, $600, $700 move, right? And then this move ended up becoming a 65% rally, right? Same with this one back here, daily bullish divergence as well, but we didn't really have like the SFP through here, but I just drew it anyway. But don't get distracted too much by that. We're going to go down onto the lower time frames here. We're going to go check out the 4-hour, and we can see, right, this played out really nicely here on the 4-hour. Right, so we've got our bullhammer candle, right, with a really big long candle. Usually they're smaller like this, right? But a really big long candle, right? Usually they're a bit smaller, but this one was just so bullish because it bounced off such a key level, right? It came back down to 6.4. People were saying, oh, it's going to 5K, blah, 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 whatever. We bounced off this key order block level, which if we go out, we can see where's the chart gone? Right, we can see, right, the level that we bounced off is back here. We bounced off this key weekly level, which is literally where the last swing high was before the capitulation dump, which is always, things like that are always going to be important levels. Right, we came back down and tagged that, and then we ended up closing as a bull hammer, perfect bull hammer, swing failure pattern on the weekly as well, right? Let's go back to the 4 hour. This is a larger time frame bullish divergence. We can see we get the 4 hour in here, and I actually entered. This is one of the ones I entered as soon as it flipped back. I was like, okay, that wick is in. This is going to end up playing out as a bull hammer. I actually got in like around this area here, not knowing that it was just going to go straight up, because sometimes it does do that. Sometimes it just goes sideways for a while and does this and then takes off. Sometimes the next candle actually dips down quite low and comes down to test people to see if they're going to puke their bags or not. And then, the higher time frame players push back up again. So yeah, there's another one example. Here's another example on the 4 hour, right? So we've got, right, our bull div through here. Troy, is our bullish divergence, the market mastery one, is that indicator working at the moment?
Yeah. So they're going to put their TradingView names into that channel I mentioned earlier.
Okay, so to get that, you're gonna just do what Troy said. Put your name into the TradingView thing, and Troy will send it to you. This one, the one I've got up at the moment, is the Libertas RSI one. Just in case Troy's gets taken down because TradingView hates us for some reason. Because we improved this one, it's much better. You can get alerts from it and stuff like that. There's not the big bulky letters over the top of it, which get annoying. So here's another version of it, right? This one isn't really like your perfect SFP, but it ends up playing out as a Morningstar reversal. So it's a really good example to give you guys, so you can see how these things can play out differently. All right, so this is basically the Morningstar pattern ends up playing out as the swing failure, right? So we break below, we just have one candle below the level, and then we go back up. Let's get rid of this line here because that's for the other one, right? In combination with our bullish divergence, and then we have a nice rally from that. So when we see something like this play out, right, and we get the bullish divergence, it actually comes at this candle, right? So the bull div is in by this candle close, right? So we want to be getting long off here. I'll probably be putting my stop loss below there on 5%. Yeah, we'll probably just keep it about here, give a little bit of space below, right? And this just looks like it's going to end up playing out as a Morningstar reversal, right? And I would expect it to come up. And I could wait for a reclaim of this level to enter if I wanted to be a little bit safer. And enter on an open candle, right? And then obviously, it plays out. And that was a nice little trade, right? Ended up being a 14% trade. I can't remember where I closed this one. I possibly closed it at this order block here for a 10%. Sounds about right. But it's a while ago now. It was 25th of November. I was in America when this was playing out. So yeah, I'll give you one more example in this trading range. Right. Sometimes off these, the second push as well can come back to your fib, right? So this is a really nice example here because this ended up playing out really perfectly off the 618. So it came back, tagged the 618, and then pushed again higher. Oh, it might take a while. Right, and then we got the bullish divergence here for the big one on the daily list I was showing you before, right? And then the second low comes back, and we have pretty much the same thing here, and we have a tag of the 0.618, right, which is our entry level for Fibonacci. Then we can see that we have our really nice entry candle here, which is so we basically put in a swing failure of the Fibonacci level of the 0.618. So that's our entry candle there because we broke below a key level. When we're below that, people are going to be thinking, oh crap, this is breaking the 618. This is going to nuke and we're going to head back down and maybe try for a double bottom or something like that back at the 6,400 level. But no, we end up pushing back up and closing on the 4 hour there. And you can see immediately the market flips to being bullish and we get this huge candle in the next candle. And then, it ends up rallying into a massive breakout. And we can see that when we take these trades, right, and this was an amazing trade, right? So you probably put your stop loss below the order block, right? 2.49 to 3 is, decent amount of space, right? So FTA would be this point here, right, a 1.2, which isn't too bad. But with trades like this, and we've already had the big daily, and we had the daily bullish divergence, everything like that, and this is also the head and shoulders pattern. We're setting up for a really nice trade that I'm expecting to be pretty aggressive. So if I was going to get in on this point here, I'd be looking for at least the first target of the fib level, which is the 0.272. So Troy just showed us how to do that before. Sorry, so FTA is known as the first trouble area. So it's the first level of resistance. Right, so and then the Fibonacci level, right, is the first target. I can drag this guy out. Yep, there we go. Right, so our first target, right, on Fibonacci is the negative 0.272, right? So you can do that in your fib. I'll show you how to do it now, just in case people get annoyed. Right, so you go to style. I just take one of the levels and replace it with negative 0.272 and then change it to green. And I get another level that's not really used that much. I change that to green as well and go negative 0.618. And that's going to give us our 2 Fibonacci targets. So T1 for Fibonacci target 1 and then T2 for Fibonacci target 2 here. But a lot of the time, if I've got an order block or something like that through here, because I know that they're going to be really strong resistance levels, I just put it at the top of the order block or near the top of the order block, right? Because you don't always want to be at the very round level, right? You would just be a little bit below to make sure you get your target hit. Right, so that played out really nicely. So I always wait for a candle, something like this for the entry candle, or like at least go down to the lower time frames and getting on like a 5-minute, a 5-minute bullish divergence or a 5-minute pin candle or something like that. That I'm, using that entry to get into the higher time frame position, because otherwise, you can just get caught getting into position in the wrong spot and then get wrecked, right? Do you give any weight to the pivots on the indicator? So the pivot is just telling you that there's a low. So it's not like the pivot. It's not like this type of pivot where it's like a key level, right? If they'll show up. They don't want to show up. Don't know what's going on with that. Right, they're not like this type of pivot. Right, they're not like this type of pivot, which is like a key level that lasts for a month or something like that we want to be looking for and see how price plays off it. They don't seem to work that well on gold, really. I don't know, maybe they do a bit on sometimes, but they work pretty well on Bitcoin. The pivots, right, which are just the blue arrows on the version that Troy made, right? So here's a really nice example. So we've got the entry candle on this one here, right? We've got the bull div that ends up coming here. So, right, so we're looking at, so this is just the low, right? So the first low, right, when we're breaking a new low, and then the divergence pops up as the green arrow. So this is what it's going to look like for the ones you guys. If you're using the other one, it's going to have like the pivot and the bull div, but it gets a bit annoying for me, I find, because it sort of just gets in your way a little bit. Here's some example of a couple that we just literally just had and would have given you the perfect entry for this whole rally, right? So we've got the bullish divergence, right? This actually comes from back here, right? This bull div through here. So all three here, they're actually multiple bull divs, right? So we have the bull div here, which is also the Morningstar reversal pattern, right? So we have the down candle, the doji, and then the up candle, right? That push, so this ended up, that would be an entry candle, or you might wait till that flips green, right? Some decent trades there. It wasn't the most amazing one though, because it only rallied a little bit and then rolled over. Still, you can get 6, 7, 8% trade off that. But this one here, you know, we broke SFP, the range low here, bullish divergence, and then price ends up taking off. Right, the last chance. This is probably a nicer entry here. There's no bull div here, but we wick the range this previous wick here, which is going to have people thinking that market's going to dump again, right? Because if we look at it like this, right, you have a big red candle. It looks like this. Right, this is what people are looking at. And it looks like shit. So they're thinking, you know, this is going to dump down and we're probably going to be looking for 8.5 at least here. But then, you know, the price starts to reverse. It closes here and there's people trapped underneath the key level. And then we start to take off, right? And then we all know what would happen. So this would have literally got you in for the perfect position to be in this trade. I took this one here. And then I just got frustrated throughout this area here. I didn't take this trade. I actually waited for the breakout candle, which was this one. So I ended up just getting in here because I got sick of trying to long all the time but going nowhere. Just got patient for the end of the symmetrical triangle. So yeah, generally what will happen is at the end of these, you know, big triangular patterns, you'll get like an SFP of a level, or you get like a 4-hour bullish divergence, and then, you know, price will finally take off after that. So it gets you in really early, right? So if you had taken this one, you would have been in here, right, before all this bullshit, and you know, you're gonna have to wait and buy the breakout because this might have broken out and then dumped off, and I would have been wrecked. But you know, that's the game. And then I'm going to show you one more, right? And we can see this one actually only came on Binance. Oh, sorry, it didn't come on BitMEX because of the whole fuck up with the liquidation engine and everything like that, which made this candle go much lower. But you can see, you know, with the big bull hammer candle here, this is a really nice bullish divergence here, right? So make it nice and thick so we can see it. So when we have, so this is our low here, right? And then we break that level, have the lower low and the bull divs here, right? And so when we have a big sell off like this and price goes really far below the oversold area of the RSI. So above the purple band is overbought, below the purple band is oversold, right? When we're deep oversold like this, we want to be watching to see if the next low is actually going to end up playing out as a bullish divergence, right? It does here, right? We're getting here, and this would have been the best trade probably for the entire year, right? So yeah, this it's a really simple strategy. It's extremely effective. Both work, just SFP, swing failure patterns, we know with pin reversals and morning stars, they work by themselves. Just the 4-hour bullish divergence works by itself as well. But when you get them both pop up at the same time, you know, it doesn't happen all the time. It doesn't happen that often. But if you're trading enough markets, you're going to get a fair few of them popping up every, you know, like maybe 1 or 2, something like that every week or every second week, right? But when you do get these setups, they're probably going to be the best setups that you'll get for the entire year. So you want to make sure you capitalize on them because they can be extremely profitable. I'll give you an example. I might have just got one on IOTA. Let's have a look. No, nothing really there on IOTA, but let's go and have a look here. One playing out at the moment, which is on XTZ. So we've got the nice 4-hour bullish divergence here at the moment. So we'll see if this one plays out. Basically, we need to retake this level here. I'm looking for this bit here as the resistance level. So that's going to be my take profit. And I'm expecting something like that to come up here. And then it's probably going to roll over, especially if Bitcoin takes off again, right? The thing that you have to remember, if you are trading against Bitcoin, you might get a really nice setup like this. But if Bitcoin starts to rally really hard, that this is going to roll over and get nuked anyway. And the setup, whatever it is, isn't going to play out as often. So you just need to be aware of that. When you're trading things like Bitcoin, they're more likely going to play out. So that's why generally I take these trades a lot more consistently when I'm trading Bitcoin, right? And definitely put a lot more weight on them. And so when I do get that type of setup, I will I will up my risk. So I'll change the risk when I'm entering the trade, right? So we go to our calculator, right, like this. Right, let's say I got this $36,000 account, right? I'll change that to a 3, right? Let's make this a 2.56% or something like that, right? And then you see I have a much bigger position size when I enter into that trade, because I know that the likelihood of the trade playing out and being profitable is so high that I want to put more emphasis on that trade and more weighting on my portfolio on that trade, because I'm expecting a better result. So yeah, this is a pretty good example here actually of the same type of setup, right? This is the 4 hour. This is our entry candle here. Right, this is our entry candle here, right? So we sweep the low. Get rid of these. So this is the range. This is pretty much the range low through here, right? So price is going sideways. We sweep the range low. We don't come, even though we have a full swing high, tag the range high, come back, tag the range low again. We don't sweep the entry candle with the big wick below the range, right? And then price ends up taking off. So even if you took this trade, right, it didn't play out straight away. It sort of chopped sideways for a while, right? You still end up, it plays out and it ends up playing out pretty nicely. So that's pretty much it, guys. It's a pretty simple strategy when you've traded it for a while. It's not that crazy. It's not that hard to get your head around. Just looking for key levels, you're looking for ranges. When you break below that range and you close back above, you want to be in it, because basically on the lower time frames, what's happening is something like that, right? And that's generally what you want to be looking for in your trading. When you sweep a range, the bottom of a range or a key level, then you reclaim that level, right? You can apply this to any market, right? When you do that, it's always a very bullish sign. You can expect price to continue to the upside, right? And the same thing happens when in the other direction, right? Let's just say this was the range high here, right? And price has been bouncing around in here. We might even sweep the range low, right? We come up, reclaim the range high, right? That's where you want to be getting into a short, right there. So that's pretty much it, guys. Hope you enjoyed the training session tonight. We do have the discount on the course. If you want to learn more about our trading strategies, it's got 20% off, $100 off, which is absolutely ridiculously cheap for the value that's in the course, 26 hours long. And it'll give you everything you need to know to become an absolute weapon. So that's pretty much it, guys. Hope you all enjoyed the session. Is there anything else you want to add, Troy?
Did you mention with the divs, the bull divs and the bear divs, that it was candle to candle and not wick to wick?
Yes. So with the divergences, it's always candlestick close to candlestick close. And that is because the RSI, which is the indicator that we use to take the divergence, is taken from the candle body closes. It's not taken from the wicks. So that's a mistake that I see people making a lot of the time. They'll be like, oh, but there's not a divergence here, right? Don't be that guy. There's some YouTubers like the guy who's the moon. Oh my God, so painful. He's always drawing his divergences from wicks. I'm like, bro, do you know how it works? But anyway, you would go from candle body close to candle body close, because that's how that indicator is taking its metrics.
Cool.
Yeah, so that's pretty much it.
The next episode, guys, we'll go through taking trades on FTX as an exchange. So
yeah. Definitely.
Go from there, guys. Cheers for tuning in. Thank you. Hope
Too
you guys
easy,
learned
lads.
something.
We'll see you guys all for the last episode, which is going to be Tuesday night at 8 p.m. So we'll see you guys all there. It looks like Bitcoin's going to finally try and have a crack at breaking out. Did we just put it in SFP? Yeah, we actually just did on the 1 hour. So we just got the setup that we've been talking about for the last hour and a bit.
There's a 1 hour bull div as well, yeah.
Right. So look at that. Couldn't have had better timing. And see how it doesn't really matter. It just takes out like the bottom by $1, right? Then you see the reaction, and now it's going to play out as a Morningstar reversal, and price is pushing to the upside. So yeah, that's pretty much it, guys. Thanks a lot for tuning in. Hopefully this trade plays out to the upside. Everyone's in on a long, and yeah, make some cash. See you guys soon.
See you guys.